Tyler, people love dividends. People love growth. When you can get dividend growth on top of pure growth, get all of that combined, you can get just a dynamo winning business. Let's take a look at a company that you and I both own, have exposure to, have owned for a long time, and we like the long term potential of. That's Brookfield Renewable. Let's talk about where we think Brookfield Renewable can be, say, 5 years from now.
This must be a treat for you. This is like one of your top 5 favorite companies? I mean, it's a quality company nonetheless, but the added treat of being one of Jason's favorites.
Well, it's tied for second with another Brookfield that I own. So this is definitely a treat to talk about. But because it's been a wonderful investment for me and it's tied to so many of the tailwinds that are driving the future. Again, before we get into it, Tyler, this is Investing Unscripted. This video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, check out our special link. It's fool.com/unscripted. Go to fool.com/unscripted. You can get access to The Motley Fool's 10 top stocks to buy right now. All right. So first, what is Brookfield Renewable? What does it do?
Brookfield Renewable is one of the largest owners and operators of renewable power assets globally. I think about half of them are in North America, which is largely wind and solar. But this is one of those interesting businesses that tends to go where the wind blows or where the sun shines or maybe where the water's backed up, because one of the big kind of, I call it game changing investments that got Brookfield Renewable started was a bunch of hydroelectric dams in Colombia, I believe was like one of the core investments that it made very, very early on, and how this company got its start. But over time, of course, the growth opportunities in renewable have been in wind and solar. So it has been a large grower in that space. And I think we'll get into how much that's grown and how much it will probably grow from here. But yeah, it's a very simple business, long-term contracted rates that tend to go with inflation over a very long time, which for somebody that's looking for stable and growing dividends, that's a pretty good foundation to work off of.
Yeah, especially when you look at the long-term returns of these businesses and how they've been able to be value buyers and opportunistic buyers. You talk about the hydroelectric facilities in Latin America. That was more or less the beginning of the business. And Brookfield, the parent company, Brookfield Corporation, with its asset management business, alternative asset management, had an opportunity to acquire some assets to own partly in one of the funds that they managed at Brookfield Asset Management. Needed an operating business, but also needed to capitalize to invest it. And Brookfield Renewable was a great way to be able to do that, to buy these deeply discounted assets that it's been able to grow. And then in 2017, I believe it was, is when Brookfield really fully jumped into solar and wind, when there were some opportunities to buy some large utility scale operators at deeply discounted prices because of some utility companies that struggled and failed, and created an opportunity to buy those assets from those businesses out of bankruptcy. And that was the foundation for what has become its wind and solar utility scale business. I'm going to share another slide here that just again highlights how much the company has grown and tells me and kind of makes it clear that management sees an opportunity to continue to grow. So this on the right, this is deployment of equity into new assets. So that growth has really accelerated over the past 5 years, Tyler. And this year we saw 7 GWh of capacity, was 7 GWh of capacity that was commissioned. Just for context, what does 7 GWh represent? Nearly 20% of its total capacity is represented in that 7 GW of commissioned capacity. Total operating capacity is 37 gigawatts. Tyler, something you and I talked about before is this number right here, which is essentially the pipeline that it has of future opportunities that works out to a 5x its current business size. Now, obviously, it's not going to win every potential opportunity out there, buy every business that's out there, win every opportunity to develop new assets, but it has certainly won its share.
There was something back there I think we should mention, because that cumulative equity deployed slide that you showed said 43 billion. And then you go, wait, this is a $4.55 billion market cap company, right? Well, part of the reason that's the case is because Brookfield Renewable partners with a lot of developers and customers and operators to pool capital in this. And I think about, of that equity deployed, a decent portion of that is deployed by some of its partners and the capital they have deployed into this as well. That may be one of the kind of a little bit of a knock when it comes to this business, because the actual ownership of these assets can be a little bit opaque. The good side of it, though, is they are able to find people who want to invest alongside them. And it's part of the reason why this has been able to grow so well, is because people trust them to underwrite profitable growth, and people want to be part of that.
One of the key partners where a lot of that equity comes from, in addition to the partners on the ground, is Brookfield Corporation and its related party business, Brookfield Asset Management. So, Brookfield Asset Management is one of the largest alternative asset managers in the world and is one of the fastest growing as well. Whether it's in real estate or debt or infrastructure assets, energy assets broadly, there is a substantial demand from investors to own alternative assets that aren't necessarily correlated to stock markets. The key is, unlike like with Next Era Energy Partners that we've talked about before, Next Era Energy Partners exists just as an economic like tool for Next Era Energy, the utility, to drop down assets and get them off of its own balance sheet, but still get some of the economic benefit through its equity ownership of Next Era Energy Partners. It's a different relationship with Brookfield Renewable and its partners because they see it as a value add partner to be the expert and be involved in operating and developing these assets, but also get an opportunity to have an economic interest in those assets as well through its own equities. It's a better positioned relationship than many of its peers in this space, which is one of the reasons it's been a big winner and one of the reasons that I really continue to like it a lot. We were talking about in terms of growth and opportunity. One of the ways investors can win from the growth in spending for artificial intelligence, Tyler, is Brookfield. And you've talked about companies like MCOR that are building the data centers and that are involved in electrical and HVAC and all of those sorts of things. Another picks and shovels business is Brookfield, an energy supplier, right? So we saw this big deal back in May of 2024 between Brookfield and Microsoft for 10.5 gigawatts of new capacity. So to be clear, this is new renewable capacity. It is a massive, massive deal. Just to put that in perspective, the 2024 pipeline, the expected commission capacity for Brookfield Renewable, 7 gigawatts. The deal with Microsoft, that single deal, is worth roughly 50% more than the entire new capacity that Brookfield Renewable deployed last year. That one deal is a year and a half worth of new capacity. That is extraordinary. And we know that Microsoft is one of the biggest spenders in deploying new data centers and looking for partners with power for low carbon power for it, but it's not by far not the only one. So this represents where I think the real upside is for, or where the real opportunity is for companies, for investors that are looking for the companies that are going to profit from that growth in power demand. A lot of people are looking at regular utilities, Tyler. I think they should be looking at the Brookfield Renewables and Clearway Energies of the world instead. Looking at Brookfield Renewable right now, do you think this is an opportunity? Investors are looking at an opportunity to buy?
It looks a lot better than I think it did a couple, maybe a year ago, maybe 2 years ago. It's something you and I have talked about a little bit, where I think 2021, the dividend yield had gotten probably a little too low for what its expectations of growth were. It got down to like 2%, which for the rate of growth that this company projects, which is often in the 6 to 10% range, that's really low. But today, with a dividend yield closer to 5% at the corporate level, 6.2 at the partnership level, that is where things start to look a lot more attractive. At those rates, at the expected growth that they want to grow at, that is a much more attractive long-term buy and hold sort of proposition versus what it was a couple of years ago.